The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, folks, to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. As we start the show off, one thing that is not missing today is a volume. And as they say, we got it coming out every orifice that is here. What happened? There's something broken here. Okay, here we go. Come on. Is it broken? I think we got broke here once again. Everything was just working just a minute ago, and now we'll see here. Don't know what's gone on here. Well, S&P's off 4 points. Can't get the volume. I don't know why. I just saw it a few minutes ago. Anyway, it was huge volume. And, of course, that dip below. Every time we start heading lower, we get lots of volume. Every time we go up now is very light volume. As I said, every bounce should be shorted now. And that's it. Now, my engineer thinks I need a cart machine. No, I'm talking about my quote system. It's been years since they've when I've clicked on them, not given me a instant quote. Last couple of weeks have been kind of flaky out here. I don't know if there's too many people out there using them or if there's another big issue out there, but they're down here for the moment. Oh, I see what's happening. They think that we need a new format for it, and there it is. You just have to continue. I hate this. You got to, is that it? No. It's just a long list doesn't show up. My short list shows up. Oh, my word. Worked 5 minutes ago, and they have to change. They can't leave websites alone, can they? They've always got to be tinkering with them and changing them and messing with them. Well, that's why. Yeah. I think I can get rid of this horrible little beta here, and we can get back to what we want to look at. Nope. It fires me right back into the beta for that. Anyway, I guess we just have to persevere and plunge on, and I'll try to get my system here. This is not my trading system. I've got another table right over there, the one I keep for trading all the time. And most of the time I wheel my chair over there. Sometimes I come over here if I want to talk in the den. But yeah, it's broke. Dave is the machine. Welcome to the machine. And in the meantime, of course, we always like to meet here between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
That it's all just a little bit of history repeating.
It is, and on this day in 1887, the Interstate Commerce Act is enacted, creating the U.S. Interstate Commerce Commission and giving the federal government the radical new right to regulate the conduct of private businesses acting in the public interest, such as railroads. This is where we probably came off the rails as a country, and that is there were enumerated rights for the states, and of course enumerated rights for the federal government. And if they weren't enumerated in the federal government, they went to the state governments. And this is kind of where we took a far left turn. And while you have to say that probably a huge amount of our growth as a country was because of this act, it occasionally becomes used by evildoers, read that, politicians, for their evil doing. And one of the worst double-edged swords ever to come out of any thing out of a politician. In fact, wouldn't it be nice if the double-edged sword actually did come out of a politician? No such luck for us today. But we will continue on. What else do we have out here? Let's see if I can get any of these other ones going on. No, I guess you can. It's just I guess if you've got a long list, it's just not showing up here. I'm not exactly sure why. Let's see if we make it wider. Does not say. Well, I'm going to be flying in the blind other than the S&P is 1906.44. I did see that at the start of Steve's show that we already had 3 billion shares on the New York Stock Exchange tape, and that probably told me everything we needed to know. And that was that sellers were coming to the party. I added one more short position today, and that was in the longer-term Tech Insider. And we'll continue to add positions as I see fit. But again, not going after the indexes per se, but finding the weakest points and going after them in the market. Anyway, a lot of stuff out here really starting to stink up the place. Before I get into anything else, I do want to talk about Amazon. We've talked about that for a little while in the last couple of days, just how bad Amazon is looking at here now. And I thought it very interesting. The reason why is I love these confluence levels. And if you break one of them, you've got about 3 days to get back inside, or there's going to be a lot of trouble, big trouble, right here in River City. It begins with P and ends with L. I think I was in the, I was. I think when I was about 10 years old, I was in that play. I ran around with my trumpet. That's the thing I remember. I didn't even watch the movie version of it. Anyway, when we're talking about this, not a lot of volume to try to push it higher today. There isn't a whole lot out here in it, but you need to really close above 538 just to get back in the range, and you really need to get above and close above 544.76 just to think that this came in. Now, you had huge volume when you broke it yesterday, and what was that, about 10 million shares? And they opened it lower, tried to push it higher today, lighter volume. We continue to see the S&P kind of meander around. It's only off 4 points. But again, like I said, there's way too much volume out here. And when we look at some of the other stocks that would have you scratching your head, you really have to say, man, that's problems. I was looking at the German bank, Deutsche Bank, and it was off 10%. Ouch. So there's a lot still going on in the marketplace below the subsects of what you're seeing on the TV. And I don't know if there's anything else you can say about it other than that. Let's see. Come on. That's keeps sending me to the beta version of the web interface for my broker, which I do not like. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Earlier in the day, starting at 9 o'clock, congressional testimony started for the biotechs. As soon as probably the worst of it was over, they tried to rally it. Never got very far, didn't have a lot of volume. In the meantime, during the break, I tried yet another browser, and guess what? It works fine. For whatever reason, they're targeting my browser for the new interface, and it is broken. Anyway, we're at 1911 on the S&P cash, which is off 2 points on the S&P cash. Almost 3.4 billion shares today. So an absolute ton of shares. Got to high of 1927. But what that tells me is there were a lot of people just waiting to tee off above this, probably, let's call it 1950 level. And we'll be watching the volume ever since. But a ton of volume, which means we're probably going to be closing in on 4.5 to 4.8 billion shares on the day, and that is a ton. Can I get this thing to rally? Maybe. But my guess is that right now there's probably a seller for everybody that wants to buy, which means that we're probably locked in a lower trading range for a little while. But I continue to think we're going to see a lot lower before we see higher. What else did we have out here? I wanted to look at the IBB. We talked about it. It can't get out of its own way. And you would think that, it went to 271 today at the end of the congressional testimony. And then this got instantly sold. Now, it's not at the lows, but it's certainly not moving. I just like the way that Amazon is working. I had some emails just before the show, and you can email me too at path@tfnn.com. That's PATH, as in the path of least resistance. And email me. But the question was, why is Google acting so horribly after earnings? And I mean, this thing is another one that's come down, and it's broken its confluence today. It needed to close over 734 to 736. And, is the volume big? No. Is this still probably going to be one of the strongest stocks out there? Yes. But, they had some pretty good earnings, and then the thing started to sell off. And I haven't heard a lot of people talking about the reason why, at least the reason I believe why. And that is one of the original guys that really put the company together is leaving. He basically was the guy between the two engineers from Stanford University who came up with the search engine. And he stood between those guys and figured out not only how to put it together into code and get the code up and running on the website, but how it was to learn. And that guy is leaving after, 15 years or so. And people just do not like it when the Beatles break up. Let me put it that way. They thought these three guys were the reason for this stock running. Of course, everybody's more than willing to sell Google because guess what? You can sell it and there's a buyer for it, unlike a lot of other stocks out here. But the gentleman probably left because more and more of what he was doing was being replaced by the guy that's taking over for him in what they call machine learning. And that is kind of an artificial intelligence branch of science. This guy was much better. And as they continued to work on making the search algorithm a little bit better each time, it had gotten to the point where it was very low in the way of diminished returns. But the machine learning part that this new guy is bringing in was a lot more interesting. But of course, they don't want you to bring some guy in that no one's ever heard of or really doesn't know, although the guy's been around there for a long time. His position has just become bigger and bigger. So they're going to say, we're going to put him in that spot. I don't know if the guy quit. And I guess that's another reason. When these things aren't very clear inside a company, everybody always assumes the worst, especially if a CFO leaves. But Google, a lot of what's going on there is some big changes. And one thing that Wall Street hates is change. They just assume that everything's going to grow the clouds like Jack and the Beanstalk, and that will be it. But certainly, what you want to see, you saw it pierced yesterday and closed back in above it. What you did and do see today is out there. And of course, you had what I think you could call is a fairly big three-gap play in this stock. That could take it all the way back down to 625 bucks. So there is still some meat left on the bone if this fails. You had a high volume high, which ended up being a blow-off top. It didn't even hold that for the day and continued to sell off lower. But that February 2nd return, actually, if you could really see it into the earnings call, and as soon as they really started bringing up the fact this guy was leaving, the whole thing started to turn. I guess at this point, all you need to do is give an excuse, and the stocks will pretty instantly turn. We also have continued weakness out here with Tesla. The only mistake I made in this is not continuing to hold this thing a little longer. We made some good money on it on the way down. This thing hit 166.99. I've given you all the reasons why I think Tesla is going and is going lower. Why I think eventually it's a $40 stock at best. But this morning on CNBC, an ex-GM president and CEO came out and basically in 2.5 minutes eviscerated it. He's got a little bit, on that world stage, they have a little bit more of a pull. But and probably one of the best things, and I haven't brought it up on Tesla, is the long-term problem they have, and that is socialism in the U.S. government. While all the stuff is great when it's coming to you, i.e. that Tesla was getting a lot of that green money coming back to them as incentives from either the state of California, a few other states were giving them, and of course the federal government. They could get anywhere from 15 to 18 grand lowering the cost of their vehicle by doing it. But a side product or unintended consequences of this is that because of the new federal laws that everybody wants to sing around and sing Kumbaya, every one of these other car makers, Chevrolet, actually General Motors, Ford, Chrysler, BMW, are all forced to sell electric vehicles because, of course, in their infinite wisdom, the government said you had to. All of these cars are sold at a loss. No one's making any money on them, especially Tesla. But his point this morning, and I think it was very valid, is guess what? They got to sell 20 or 30,000 of these Volts next year. They're going to lose money on every one of them. If it was up to them, they probably wouldn't build one until the market developed. And of course, the government's their thing is going to be, well, if we didn't force them to do it, they'd never build it. Well, that's a load of crap. If there was a market for them, it'd be there, and they would be more than glad to satisfy the market. But his point was there are going to be a ton of electric cars out because the government's forcing them to, and that is going to be the problem for Tesla. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
My call that Tesla is actually worth $40 is being challenged in the den. This disturbs me.
I find your lack of faith disturbing.
Very disturbing, in fact. But what else can we say about that? Well, the only thing I can say is they certainly are and do have a kind of a problem. But I have to actually make money And I know that stocks can go a lot farther than any kind of reality would ever justify. And certainly Tesla has.
I reject your reality and insert my own.
Yes, I do. I reject your reality, and that's normally what most people on Wall Street do. And of course, a couple years later, GoPro is under $9. All the rest of them, it just takes a while. And one of the most interesting things that I've seen is a quote. I can't remember who it's by now, but it was one of the most fantastic ones. And that is that America, I think it said American or Americans, love a liar. The bigger, the better. And I guess sometimes I just think that people love being lied to. The whole Hyperloop thing, I'm wondering what happens during the first earthquake. Can the thing shut down fast enough? We've got all these people making, some guy came out with Airbus came out with a design for a new aircraft that would take, I think, 30 minutes to go from England to the United States. But one little minor problem would be that no human would be able to actually survive the G-forces that plane would give you. So, I mean, you always have to think, where's the fly in the ointment? If there was no problems, it already exists. And why it doesn't? Well, it doesn't exist for either a reason that the market doesn't accept it, it's not technically feasible, or it's not technically or not financially affordable. And that is my problem with Tesla. That is that you've got a $20,000 or $30,000 battery pack. That battery pack is probably going to be dead in about 5 years. Oh, boy, I'm going to show you something after the next break. I'll go get it. But I'm actually replacing a battery pack right now because it's so much cheaper than buying the original one. I don't even know if the original one's available with new batteries. So I've had this impact gun for a while, but I just bought the new batteries for it. And they want $100 for the battery pack. I bought the batteries for $32. And they're better batteries with higher capacity on Amazon. Got them in 2 days. All I got to do is solder them in. But, throwing away all those batteries, that's a pretty big... What if you had to throw away the engine after 5 years? That's basically what you're talking about, is every 5 to 7 years, those batteries are only going to have half the charge, only be able to take half the charge that they had before. That's why I think if General Motors actually does present and ship that Volt at $30,000 after all the tax credits, that's going to be an issue. And of course, Tesla is losing its tax credit for any car over $50,000 in California. So there's another 7% on the top of the price of that car next year in California. Just a lot of stuff. Everybody wants it to be true. I've kind of been watching the X-Files for a while. There's all this technology, and everybody wants it to be true. They want to believe. I'm not a cynic, but I'm certainly a skeptic. And if it doesn't make sense on the back of an envelope, it probably does not make sense in real life. But I know everybody wants to believe. You can continue believing, or you can listen to me and see what happens to your bank account. Anyway, what else do we have going on here? I wanted to look through some of these other stocks. So you give me just a second here, because I got to get this up and running. I didn't have time to go back and load all of them, but we will. I'll get them back up here. There we go. Wanted to go through some of the stocks that were moving. Buffalo Wild Wing actually up $8, which is not. They were down yesterday, so it's about the same. Don't see a lot of change in this. BWLD. They have a real tendency to start failing. And that is after the Final Four. I wouldn't be short this probably till then. You've got a excellent confluence range right here at the 155 level. That's where it went right into it again today. Could it just go sideways here for a while? Yes. Was there anything in their earnings call that made this thing any better? No. Do you have a high volume low out here at 138.31 that needs testing? Yes. So, there's a lot of things going on out here, but I don't think you're going to see a great deal in that. We're trading at it 1908.70 with 3.5 billion shares. As I said, volume is going to be horrifically big. It's going to be huge. It'll be huge. Okay. What else do we have? Oh, I wanted to look at some of the other stocks that were moving out here, or lack of moving. Of course, some of the bigger stocks out here getting hit are in retail. Kohl's out here. Everybody, once again, this thing continues to get hammered on every earnings call. Just look for the gaps, and you can pretty much figure out where the earnings calls came from. This one down today on 17 million shares. It's broke out. It destroyed its lows. Let's go out and look at a little longer one, which is at the $40 level. And I keep on going back and see just how far back this thing goes. Am I out of time? No, I'm out of how far back my data goes. I don't know why either. Maybe I can get it here. Hang on a second. Not exactly sure why it's doing that. No, not doing that either. Okay. No, when I said out of time, I was actually talking about time on the chart, not time in this segment. Anyway, Kohl's, horrible. Another stock out here is Ralph Lauren. He handed the reins over to a new CEO. You know, this is when this stock really started to fall apart, is that news started to come out, for the last 6 months. When you get a company that's basically based on a single individual, it is very tough. Just look at Apple. It can go on for a little while, but it becomes problematic after. Of course, he's not quite dead yet, but certainly out of the day-to-day running of the company. But if you're looking at more stocks, come out here, test the lows on lighter volume, and then come back a week later and blow through the lows, I think this is the typical pattern in the market now. September 29th, this thing was at 103.29 with 2.2 million shares. Got into it on the 15th with 1.4 million shares, rallied, and of course it comes out and blows through everything with 7.7 million shares today. When we go back and look at this, just depends on how far you can go back. This thing is back to some pretty long gaps. Those gaps go back. Where's that? The gap goes back to 2010 now. So we're all the way back there with little... Is he the alligator guy? Or is that another one? Ralph Lauren? The alligator on the shirt? Or is he another one? I don't know. Anyway, you got some nice gaps out here. $80, $70, $67. All those gaps are probably going to be opened up now. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced points and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to look at a few other stocks. Intercontinental Exchange, boy, wiped out a lot of trading here in one day. 269.89 was the high just 3 days ago on February 1st. This is pretty much, what it was, 264 it opened up, got down to 245, actually 241.81. And it's hard to really see that this kind of chop is going to bring huge profits for the broker-dealers over the long term. In the short term, of course, all this volume pretty much gets you exactly what you expect, which is the retail clients standing back. And, of course, that's the last thing that the big men of the street want because, of course, that's where their pool of suckers normally comes from. And without a pool of suckers, it's not easy to distribute whatever you're pushing out here today and or get them in on the wrong side of the trade. We're off 7 points on the S&P cash, 3.6 billion shares. So it's going to be a big day, especially when we come into the close. I expect that if you got down below 1898 on the S&P cash, you would probably see an extra 300 million shares, maybe 400 million shares by the end of the day. So we could get up into that $5 billion mark for the overall volume on the New York Stock Exchange. And kind of light and variable for the last 10 minutes. So everybody's kind of getting and wound up, getting ready for their positions. As I said, I'm going to selectively and continually put on more positions as I get my opportunity presents themselves. One did today, but man, the risk reward is thin. I think the window was open for about 10 minutes on my trade today. I'm sorry that if everybody that wanted to didn't get in, but man, sometimes it is just that thin that things work out. We'll add more. There will always be more positions out here. What else do we want to look at? I want to look at stocks that are moving. We talked about ICE. This thing blew apart everything. I don't know what else you can say about that. Monstrous volume. I guess we can look to how far more of this could come back. And you blew it out, so it's not lower than the previous two lows at 240. But I think that opens up the door eventually to this September 29th low at 223.49 and the August 24th low at 219.53. And almost all these stocks are coming back to their August 24th lows eventually. You can take a look at it. Housing continues to be a drag for those people that sell things that you count sheep on, otherwise known as beds. Huge volume down on Tempur Sealy today. It did not break lows, but man, you don't like to see this kind of volume back at the January 20th low. That had 2.4 million shares. We already have 4.7. It's not holding down there. Neither did it pierce that low. But my guess is you're going to see these things play around for a few days and then come back and test those lows. And a great deal of stocks that I'm watching out here are coming back, testing lows, not blowing through them, but doing exactly what we saw in August in the energy sector, which is hit those lows, lighter volume, and just continue down. And that means that there's not an easy way to figure out what's going on out there. Let's look at some stocks that are actually higher today. FCX, of course, these are some really crowded trades. And yeah, can you get these things to bounce? You can. This thing is given about half of what it had up. It was up to 603 today on Freeport McMoran. It's not really blowing through with the volume it had on the 11th. On the way down that day, let's call it 118 million shares. Today, 92. So could you get to that? You could. It's not going to be blowing away those days with volume, so you don't want to watch that one before the end of the day. Cummins, the manufacturer of diesel engines and trucks, is having a good day, up almost 7% out here. Now, all this is done for me is say, man, after a couple of days, is this going to be one that I can pick off here? It came down with heavy volume on the 1st of December with 13 million shares. It's back into it with 3.7. Will it take a few days for this thing to wear off, or is it basically a Google that's going to start selling off tomorrow? It's up, filled its gap, or at least filled enough of its gap that I'd almost take a swing at this one. But not a lot of volume, and of course on a down day, always problematic. Beazer Homes, again, all this sector kind of crowded now with a lot of shorts. I don't know why I'd be shorting a stock at $8.68, but there are morons out there doing it and getting their hat handed to them. This thing got to 963 today, so it did go and broke through the previous high of January 22nd, but that high had only 720,000 shares. We have 1.7 million shares today. It should have been able to do everything and hold that at least 9.4 high with this kind of volume. It has not. That probably says that we're more than likely in a trading range back down to the 729 from February 3rd. You can email me at path@tfnn.com. You can call me at 877-927-6648 or put a message in the den. In the den, they are asking from Terry, says LinkedIn, LNKD. Any thoughts on it? I have to say that it's going to be tough. The way that these guys actually work, kind of different than Facebook. So as less people are being hired, which it looks like it's going to be probably this year, it is very tough to come back. This did have its bounce back to 258.39. It's back down around this low. If I just looked at the charts, I'd say that there's probably 4% up or down on this. I don't think that there's a lot of movement unless they come out with something that I have not looked at. My guess is this thing goes sideways and then down with the rest of the market. I just, reading about them in the tech press, there just isn't a lot that's changed out there. This is a stock that's almost seasonal. And of course, when we've seen all the companies laying off over the last couple of months, and especially after Christmas, it doesn't look like this company is going to be. They basically get their cash from people at being kind of headhunters, and I just don't see a lot of hiring going on, at least through the election this year. No one knows what's going to go on, and of course, the worst thing you can have in a market is indecision. Even if we didn't have all the headwinds we had in the market, the best you can hope for a lot of times in a market that is just marking time is that it doesn't go lower. So I don't see a lot higher in this stock. At best, maybe 208, maybe goes to test the previous high. My guess, though, is that from what I've read out here, they're kind of just in line and everybody looks at them. There'd have to be something really amazing that I haven't heard of yet. And there have been a few things in this earnings cycle that have been. But I just don't hear a lot about what's going on over there. I don't hear about anything that's changed. It's not like YouTube or something where they've got some other business that seems to be doing much better. It's just kind of, yeah, they're doing okay. They're going to be around 190 to 200, I think so. But other than that, I don't have a lot of clues into this. We'll be back after the break. Give me a call, 877-927-6648, and we'll be it. The one nice thing is
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. A good question in the den was, when is the Chinese market holidays over? And as far as I can tell, it was yesterday. That was it. That was the Lunar New Year Day 6 thing. And the next day that the Shanghai's closed is looks like April 5th. So you got a little while here before they go off hiding again. And that's where I start thinking that certainly we're going to be seeing a great deal more movement now that the Chinese are back and they start reacting to the huge move in the dollar. So we'll continue to look and see. Of course, yesterday the pretty much fun buying was over. If we had any stragglers, they came in today. So you can't expect any more fun money to really come into this market. I think that maybe the market was kind of pushing a little bit yesterday for that rally to try to get any money that they had into it at a higher price. today. A little bit of a hangover with that giant run off the lows. And again, I think we're going to just continue to see this choppy trading, but it will be continually lower over time until we go back and test probably somewhere around that 1810 level on the S&P cash. 3.7 billion shares as we go into the home stretch of this show. Of course, after my show is the Tom O'Brien Show, and we may even call it the 2 hours of gold today. And of course, then we've got Andy Heck coming on in the 5 o'clock hour. I gave him some new ideas for some articles. I'll probably see those Monday. And he's got a big secret that he's going to probably tell at the end of the month. But I think he's good at keeping secrets, so probably not going to hear anything about it until he's ready to tell you. I guess we could torture him. Probably be just me talking about it is torturing. Anyway, of course, the huge move in the dollar, the cash out to $96.44. You just have to wonder how much is actually of this, just how many people are on the wrong side of the trade, how many people got caught. I'm really kind of suspect in looking at a market that, of course, is happening during that Chinese New Year, and really be interesting to see how trading for China goes tonight, at least the Shanghai, and gives us anything more. Yeah. Andy says that he will let the cat out of the bag later this month, but a big announcement's coming. What else do we have? Oh, we looked at, we have time. We'll look at one more stock out here that's moving. Grubhub. Man, we haven't heard of this one for a while. GRUB. Looks like another one of these $10 stocks that ran on a lot of short covering this morning. The news wasn't all that great, but guess what? At some point, it just doesn't matter. You've got a nice move, up 10% today. Of course, got to 2098, but much lower out here now, 2110. These things, man, if you get some cash in these things, it is going to be the time to take the money and run, and that is it. But I do digress. I haven't digressed near enough this year to make sure and keep my digressing award up and ready to go, but we will continue to try so. So we went through everything else. LVLT, do I have time to get that? No, we're already out of time. Hopefully I got to your email. Thanks, everybody, for listening. Without you, I would be standing here talking to a tree. Sell when you can, not when you have to. Of course, cover when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.